Let's focus on the financial services sector. We've got Amitabh Chaudhary, who's CEO at HDFC Standard Life, right here with us in the studio. Now, Mr. Chaudhary, Amitabh, to begin with, there have been all these media reports about your likely doing an IPO in the current financial year. Would you attribute any truth to that?
Well, I think what we stated a couple of days back has been misinterpreted. What we really said was that we do not see a possibility of an IPO happening in this financial year, because given where things are. And in the next financial year, IPO could happen provided some conditions are met, and they are around growth and margin, and obviously our investors and our shareholders getting the right valuation. Now, obviously, the media seems to have reported that we are doing an IPO in the next financial year. So it all depends. I mean, I think ultimately, we need to get the growth back in the industry. We need to get our margins back up to a slightly high level, and obviously it is all linked to the right valuation for our shareholders, plus assuring ourselves that we can maintain that performance on a credible basis going forward.
So you'd say it's more factors, linked to your company's operations and the industry's, the challenges faced by the industry that is, that is going to decide the IPO rather than market conditions? Well,
the market conditions in the insurance industry are not that great. We have done very, very well in the last financial year, even in a very tough environment. I would say we have had spectacular results. We have gained market share to the extent of 260 basis points in the last financial year. It is almost a 7% gain in the last 2 years. Our expenses have gone down by 19%. Our persistency ratios are best in class. We have won 39 awards last year. Our AUMs are also up. So in a tough environment, we've done very well. So I think we have the right platform. But, today our post-overrun margins need to be much better than where they are. We need to also get the growth back in the industry, where we can go to the market and say that yes, from here on you can see a consistent growth coming back in the industry. And once that happens, yes, I think we do have the platform to be able to approach the market, and with an HDFC name, hopefully we can sell the IPO in the market.
Mr. Chaudhary, afternoon, if you could just walk us through what kind of margins you are expecting and the kind of trajectory that we can see through FY13?
So if you recall that post-September 2010, the margins in the industry fell dramatically. So our margins generally have been moving up since then. One of the reasons we've been able to achieve that is we have done better than the industry. Secondly, we have cut our costs in a big way. So last year we had post-overrun margins of almost 10.5%, pre-overrun 17.5%. We do expect these margins to grow quite well in this particular financial year. Our aim would be to get to 15 to 17% post-overrun margins to get the right valuation in the market. Now, obviously, a number of deals have happened in the insurance industry which seem to indicate that the investors are willing to pay a pretty high price, and that bodes well for us. But I think ultimately it's all about sustaining your valuation rather than getting a one-time valuation.
Right, but also, Amitabh, we saw growth in the life industry get severely impacted after the IRDA crackdown on ULIPs and things like that. Going forward, what would you say is the one big regulatory challenge? If you had to list out one regulatory challenge, which would the biggest one be for the life industry at present?
I would say it will be around clarification on products and product approvals. There is a discussion which has been going on with the IRDA for the last 4 months or so, where they have raised concerns around almost every product, and they've been built over a period of time. And hopefully we are coming to a stage where I am quite hopeful, in the next 30 to 60 days, IRDA will come out with clarifications on what they expect in each of these issues which they have with the products. And once that happens, then the product approvals post that, if they can be done quickly, I think that will be the biggest thing which is hanging over our head. There are 2 other small things. One is obviously the bank insurance guidelines, which they've been talking about for quite some time. And third is the direct tax code, which is still a big question mark.
So, Mr. Chaudhary, the insurance sector also needs capital. When do you think FDI in insurance can be expected? And do you think that also other insurance companies need to tap the market sooner or later in order to meet their capital needs?
Well, the capital needs in the insurance industry are coming down. But yes, I do not see, given where things are going, that this 26 to 49% FDI will happen in a hurry. Our capital requirements have come down to practically zero. There is also this regulation or this notion which, when the licenses were given out, I think the finance ministry had clearly stated that they expect the overall shareholding in the insurance industry from the Indian promoter side also to come down to 26% over a period of time, and they had said 10 years at that time. I think there is a pressure on that side also, that over a period of time the shareholding of Indian promoters also has to come down. So I think all of them will ultimately push towards all these insurance companies have been around for more than 10 years towards an IPO.
Right, now again, Amitabh, if you just look back maybe 7, 8 years ago, you said everyone in the insurance industry said that this is a hugely underpenetrated market, which it still is. And everyone said that there's, the pie is big enough for everyone, there is no issue about having 100 players or 200 players. Today, when you step back and look at the market, would you argue that even with the less than 30 players that you have in the life space, the market is looking a little crowded?
Oh yes, the market is crowded and more, we keep hearing of new names who want to enter the industry. So the market is obviously not panned out in terms of growth rates as what people expected. Partly obviously is driven by what has happened in the equity market, partly by some of the regulatory changes, and partly by the fact that maybe the insurance industry has not been able to do such a great job in terms of penetrating the protection side. I just recently saw data which showed that if India's protection level should have been at 100, today we are at 7. I mean, so it is hugely underprotected. There is no doubt about that. I think we have a lot of work to do ourselves to ensure that that growth comes back. Now, the second half, we have seen some growth. For example, we grew by 16%. So hopefully we are coming back to some kind of growth rate. But again, time will tell.